What is up, guys, and welcome to the Capitalist Investor YouTube channel, back with another video. Today's video is on Boeing, and it's very much a popular stock at the moment, and this is going to be a brief summary of the stock and helping you to be informed as to whether it is a buy or a sell position at the moment. So without further ado, let's get into the video. Starting with the executive summary. Hopefully most of you will know what Boeing is as a company, but if not, you can have a quick read of that executive summary, which talks around the aircrafts, jetliners, missile defense, and human spaceflight, which Boeing is involved in. Some of the key standout good things, I guess, about Boeing, and this is still within the executive summary, is that it's trading at 40.4% below its fair price, and earnings are forecast to grow 55.75% per year, although we will come on to further analysis on this below. One of the highest risk analysis I've seen is debt is not well covered by operating cash flows, and this will definitely have been an issue due to COVID-19. There has also been a volatile share price over the past 3 months. So how does this compare to similar companies? Well, as you can see on the diagram here, green being the best, red being the worst, BAE Systems is the best one out there at the moment to look at in terms of dividend, health, growth, and value, and Rolls-Royce being the worst. Looking at the share price over the past month, we can see that it has started to pick up again after a brief decline to the lowest value of 118 on the 15th of May. And actually, if we click on 3 months, we can see that actually in March it was below $100. So it has picked up then to the value that it is at 149. But actually what you can see from the beginning of March is that it was sat at $279. So it has pretty much fallen half in value. We've got a couple of sort of news articles that have been driving this, and obviously it doesn't take an idiot to work out that COVID-19 will be the main reason for this. People are not flying. There is no demand for aircrafts at the moment. Hopefully what's being factored into the price now is a future for that business and a future for Boeing if it can survive for the next couple of months. Looking at market return, so the 7-day return, 7.4% gain for Boeing, which is great. But look at that 1-year return, minus 54.8%. Really bad. Results versus industry. Boeing has underperformed the UK aerospace and defence industry, which returned 0.4% over the past year. So the overall market in aerospace and defence actually returned a positive, but Boeing returned a 54.8% negative return. We've already looked at the shareholder returns, and looking at the volatility, you can see the industry average is always very low in this sort of market because, they're steady businesses that typically, there's always a demand for aircrafts. Whereas at this current point in time, Boeing's volatile share price is at the highest end of the range. Looking at valuation, now it does have 2 out of 6 ticks here in this section, and we're going to look at each one in turn. So share price versus fair value. So based on all of the information that is out there, currently the share price of 149 is deemed 41.4% undervalued at a fair price of 254.38. Now, this fair value will be based on what it's previously been held at, as well as the forecast of what this share is expected to do based on the forecast revenue and profit that it's going to make. That's a huge discount of 41.4%, although I think there's some more underlying issues here that are driving that current price down. Looking at the price to earnings ratio, Boeing is unprofitable, so there is no PE ratio. But you can look at the average of the industry at 18.8% and the market being 14.7%. So it is hugely, well, PE ratio of negative means obviously there is no PE ratio, but it's way off what the industry and the market currently is. We'll skip over PEG ratio because there's not sufficient information. Price to book value. Boeing has negative assets, and this is a key point that we will return to, and therefore you can't compare the PB ratio. But future growth looks great. 5 out of 6 ticks in this section with a forecasted annual growth earning of 55.9%. Looking at this, we can see that in December 2024, they're expected to make 105.4 billion per year in revenue and 10 billion in earnings. This is compared to what we're expecting for 2019, or so 2020, 31st, of 68 billion and actually a loss of 1.5 billion. This will be predominantly driven by the market conditions that we currently are in. But that strong outlook of growth would please a lot of investors when looking at this stock. However, be wary that these are forecasts and therefore are not actuals, and you shouldn't just assume that the business is going to make these growths in the future. Although looking at the market being 20%, 55% would be an outstanding accomplishment if Boeing were to achieve this. With an annual earnings growth of 10.9%, which is above both industry and market. Although quite worryingly, the market is 3.6%, 10.9% could be significantly too high. So we've touched through each of these. The bad, if you're interested in what the one bad thing was high growth revenue. Boeing's revenue 10.9% per year is forecast to grow slower than 20% per year. I think 10.9% is actually not too bad, but it's saying here that 20% should be the aim for the growth. Let's move on to the next section. Future return on equity. Boeing's return on equity is forecast to be high in 3 years' time, 29.3%. That's a very good statistic there. Past performance is the one that stands out for me. How has Boeing performed over the past 5 years? Minus 4.1% historical annual earnings growth. So, it has really struggled in the past, in the past couple of years, really. And I think, the pandemic is really just strengthening the underlying issues that Boeing is having here. Boeing is currently unprofitable, and, it's going to continue to be unprofitable this year because of the effects of this. And what stands out for me is we're forecasting all this growth, but actually the past earnings growth has been the complete opposite of what the market and what the industry is doing in itself. The industry grew at 2.7%, whereas the company, shrank at 4.1%. Past 5 years annual earnings growth minus 133.9%. You can see these statistics are not boding well for Boeing. It's unprofitable and loss has increased over the past 5 years at a rate of 4.1% per year. Return on equity. Well, liabilities exceed assets, so it's difficult to calculate its return on equity. Return on assets, again, negative against the industry of 5.4%. Again, financial health. So this is now looking at the assets and the liabilities on the balance sheet, and how do these, how strong is their balance sheet? Looking at this, we do have short-term assets outweighing short-term liabilities, But what you can see here is some long-term liabilities that, if you added both long-term and short-term, you would see that the liabilities are actually exceeding the assets, and therefore Boeing has a negative shareholders' equity, which is a more serious situation than short-term assets not covering short-term liabilities. Debt to equity ratio here. So, you're looking at here where debt and equity sort of, matched at this point, but then look at the stark difference that we currently have. Debt is increasing and equity is decreasing at such a rate where we're at minus 415.9% for March 2020. Boeing has negative shareholders' equity, so we do not need to check if its debt has reduced over time. Looking at the balance sheet, we can see quite a lot of stock, which is not unusual for an airline company. There is cash within there, and there isn't really any non-physical assets sitting in there. But it's this huge debt, 37.5, which is double what the cash figure is, which worries me. It does talk about the cash runaway. So, can the business remain stable for at least a year with the cash that it has? And based on the information that we have, yes, it can. On average in the past, therefore, cash is not a concern. profitable on average in the past, and therefore cash is not a concern. Dividend. As you can see, this is not looking good, and as dividend investors, this is obviously a section that we pay particular interest to. 0.7% forecast dividend yield. The bottom market of 25% have a yield of 2%. 0.7% is not going to cut it for investors, and to be honest, it's going to be nil. Based on the information that I know, the dividend for Boeing will be nil. 0.7% is the forecast. If it makes some of those profit figures, it may return to a dividend, but at this rate, I do not believe a dividend will be paid. And you can see that actually, a dividend that was being paid, was continually grow, and then we hit 2020 and cut the dividend. We're not going to pay a dividend, and it's going to take a while for that to build back up, and that's if they can even make it out of this out of this bad time that they've currently got. Obviously, as many of you will know, they've got a new CEO, so not even a full year's worth of CEO, and actually that average management tenure, 4.2 years, is quite a stark issue, I guess, within the business, that there isn't a very long-term board or leadership within this company, and all of them, they're very experienced in age-wise, but 4.2 years, it does say here is considered experience, but I don't believe 4.2 years is experienced, and with a new CEO they could run into issues. Looking at the ownership, there's actually no information within there to draw out. And then looking at the actual ownership, private companies 0.002%, state 0.05%, individual investors 0.1%, employee share schemes 5.4%. The general public owns 37.8%, which is the second largest holding, and then institutions at 56.6% holding. And you can see that the top shareholders in terms of the funds are there. There's the ticker number for it, so it's BOE, and I'm looking at the exchange on the London Stock Exchange with a market cap of 82.3 billion and 564 million shares outstanding. If you're interested in the number of employees, then we're looking at 161,000, and that has sort of, it's probably the average, I guess, across that period, although there was a decrease in 2018 down to 140.8%. So there isn't really much else to draw out of here. My personal opinion, and again, I need to reiterate that I'm not a financial advisor, and therefore no advice should be taken from this in terms of investing. If you wish to invest in Boeing, you should do so, using your own knowledge, and I should not be held responsible for the investing decisions that you make. Having said that, I believe Boeing is not an investment opportunity that I would be willing to get involved in. I think at this point it is very much a speculative stock. I think some of those forecast growths look great, but is the business going to be there in a year's time? It's going to struggle with the cash that it has and the debt that it has. It is really going to struggle. For me, not paying a dividend is a killer, and actually restarting the dividend is also a killer. And for me, I don't think this is a buying opportunity, and it won't be in my portfolio, but it's definitely a one to watch. Let me know, please, in the comments below if you think it is a buy opportunity, or if you think I've missed something that would suggest this is a buy opportunity. Or if you're with me, also let me know that no, if you've got this, it's probably a selling opportunity or do not buy opportunity. As always, if you found this useful, please do hit the like button, and don't forget to subscribe if you're new to the channel. Until next time, peace.